So if you are saving your money in Kenya today, where should it really go? A bank, a SACCO, or a money market fund? In this video, I'll break down pros, cons, and help you decide the best place to save your money depending on your goals. Before we proceed, I ask you to kindly support my channel by liking this video and also hitting the subscribe button. So let's now get started. Saving money is one of the smartest financial decisions that you can make. But in Kenya, many people are confused about where to save. Some save in banks, others save in SACCOs, and many Kenyans are now moving their money to money market funds, of course, driven by the high interest rates that started all the way back in 2024, in 2025, but these rates have been dropping over the past few months. Now, let's be honest, many Kenyans save money, but very few grow it. Inflation in Kenya, especially food inflation, has been averaging between 6 to 8%, while the overall inflation rate is around 5%. That means if your money earns less than inflation, you are losing your purchasing power. So saving is not just about safety anymore. It's about returns, what you earn over time. It's also about discipline, purpose, and how fast you can access your money. So let's start by reviewing the first option, which is saving in a bank. So banks are the most common place to save money. Of course, in Kenya, we have many banks, including KCB, Equity, Cooperative Bank, we have Family Bank, and many others. So to save in a bank, you will first need to open a savings account for those without savings account. Then you will need to deposit your money and the bank keeps it safe. Remember, you can lock your savings for a period for like 6 months or more, and this will help you to minimize careless withdrawals. So, what are the pros or the benefits of saving in a bank? The first one is that it's very easy to open an account. The second advantage of saving your money in a bank is that your money is safe because banks are regulated by the Central Bank of Kenya, or CBK. And the third one is that it is the easy access to your money. Once the maturity is reached, you can access your savings through ATMs, your mobile phones, or online banking. And lastly, saving in a bank will give you access to loans and of a certain percent of your saving. So remember, taking a loan is not always bad. When used well, loans can help you to achieve your financial and life goals faster. Now, what about the drawbacks of saving in a bank? First, you will get a very low interest rate. Most banks will offer you as low as 4 to 5%, and this means inflation can reduce the value of your money. The second drawback is that some accounts have charges and minimum balances, which may lock out some people who wish to start small. For instance, some fixed savings accounts require fixing a minimum of around 20,000 shillings. So saving in a bank is ideal for emergency funds, short-term savings, or to those who wish to take loans. So let's now move to the second saving option, which is saving in a SACCO. SACCOs are member-owned savings institutions. This means when you join a SACCO, you are not just a customer, you are also an owner too. There are many SACCOs in Kenya. They are countless. I can't name them here. And to save through this option, first you need to identify a SACCO that fits your needs and eligibility. Some SACCOs have open membership to the general public, while others may have specific criteria like for employees for of a certain company or industry. And once you have identified the SACCO of your choice, you need to complete the membership applications or fill the membership application. And you'll also need to submit the required documents, pay an entrance fee, and make an initial share capital contribution. Now you can start to save regularly and you can borrow loans at lower interest rates. So what are the benefits or the pros of saving in a SACCO? The first benefit is that SACCOs have higher interest on savings than banks. The second benefit is that you earn annual dividend or shares, which is different from the interest earned. And most SACCOs pay between 8 to 15% dividends depending on performance. If you save like 10,000 shillings monthly, that's about 20,000 shillings per year. And dividends, you get dividends of around 10%. That's 12,000 shillings over the whole year, over that 1 year. So over several years, this compounds strongly, and this can help you to grow your money more quickly. That benefit of saving your money in a SACCO is that you get access to affordable loans. So finally, SACCOs can boost your saving discipline. So now let's move to the drawbacks or the cons. One of the major drawbacks of saving in a SACCO is that the money is less liquid. You don't get instant withdrawals. In fact, most SACCOs don't allow withdrawals through mobile money platforms like M-Pesa or other platforms. And this may hurt you during an emergency when you need your money quickly. And also, some SACCOs are poorly managed. You, you all know that the collapse of some the recent collapse of some SACCOs, and in these cases, billions of shillings were lost, and also many SACCOs lost billions to Cusco and all those that saga. And when SACCOs collapse, it's members who lose the savings or investment. And another drawback is that withdrawal may require notices, which may complicate access to your savings when you need them. So based on this analysis, SACCOs are best for long-term saving for people with regular income or those planning to take loans. And now to our final option, the money market funds. So a money market fund, just to start with the introduction of what is money market fund. A money market fund is a professionally managed investment fund. And when you put your money into an MMF, it is invested in treasury bills, treasury bonds, and fixed deposits. There are many MMFs in Kenya, including ZD, HDA, Old Mutual, and many more others. So, what are the benefits of saving in an MMF? MMFs, one of the benefits that MMFs have higher returns than banks, and their interest rates on savings or the money that you put there range between 6 to 9%, depending on the current interest rate, current figures. So you remember in 2024 and the first few months of 2025, these funds offered returns as high as 17%, mainly due to the high interest rates on government securities. This led to the hype and the rush to invest in these funds. But the rates have declined over the past few months. The second benefit is that MMFs are very liquid. You can withdraw your money almost instantly through your mobile phone, your M-Pesa, also other platforms. Also, you don't need fixed savings or saving amounts to start saving in an MMF. Finally, MMFs allows you to bet inflation better because of their higher interest rates. So now, what are the pros or the drawbacks of saving in a money market fund? There are several drawbacks. One of them is that their returns often fluctuates as the interest rates on government securities fluctuates. Also, it requires discipline to save through an MMF. The instant withdrawals will tempt you to withdraw your savings and spend it. And finally, MMFs will not offer you any loans. Where should you put your money between these three options? So the answer to whether you should put your money in a money market fund or a savings account or a SACCO depends on your financial goals. If you're looking for a place to store your emergency funds, or you need frequent access to your money, a savings account is the ideal choice. But if your goal is to grow your savings over time and earn higher returns, investing in an MMF would be the best choice. But if your goal is to accumulate money and start a business, I would recommend you to save through SACCOs or a bank because you have access or the option to get loans. But it's always good to spread risks. Do not don't put your money or your savings in one place. Instead, put it in different places. Like assign some to an MMF, some to a SACCO, then the rest to a bank's savings account. And that way you can minimize losses during unfortunate events. That's all from me today. Please share your thoughts in the comment section below, and don't forget to like this video and also subscribe to my channel. So see you in the next video.